Hey guys, Mike here. So I'm going to show you a neat little chart that we can keep track of to let us know if our economy is actually slowing, and it's going to show up in the stock market. I'm going to show you how before anything really catastrophic actually happens in the market. And so I think that'd be something we'll definitely keep track of, and I'll keep you guys apprised of. I did want to do an update on the video the other day, which I'll link at the end if you hadn't seen it, where we were talking about rising food costs, and one thing that was very important was whether or not Ukraine got to plant their wheat and corn, because they're a huge exporter, right? And so a lot of people from Europe watch this channel as well, and so you guys had put down in the bottom the comment saying, yeah, they got to plant, we just don't know how much. So I started digging even deeper and actually put this in the comments of that video and found out that yes, Ukraine did get to plant, but they planted, I think it was 1.6 million acres less than they normally do. And the global wheat, whatever they're called, came out and said, yes, there's definitely going to be a major decrease in wheat output this year because of certain countries. And so obviously that will affect food prices. But more importantly, one of you guys said, hey, well, I don't care if they planted, and if they planted, great, but then guess what? You still got to ship the stuff, right? And will Russia let them? So of course, what happened Saturday? Zelensky comes out and says, no, Russia's blocking their Ukraine grain exports. And if you're Putin, why wouldn't you do this? I'm not saying, I mean, it's not right, but I'm saying if you're him, their back's up against the wall anyway. So guess what? He's going to use this as a poker chip, right? He's going to probably pretty much say, no, I want sanctions dropped, stuff like that, and I'll get out of the way and let them export their grains all you want. And if you don't, literally people are going to starve in these smaller countries. That's what's going to happen. In America, we'll just have higher food prices, but in third world countries and very poor countries, they will literally starve. And so, that's where we're at on that. And so just kind of give you an update, and I'll post that video at the end if you haven't seen it or whatever, so you know what we're talking about. But the one thing we'll look at today and kind of show you what's going to affect this and lead up to this is something we can look at. I always like to give you guys tools and things we can look at. Say, okay, let's project what's going to happen before it happens, or try to at least. And you look at this chart right here, and this is the S&P 500 operating earnings per share yearly percent change. And you can see, obviously, if we go over to the right, you can see that earnings have been dropping off a cliff since 2021. And we'll see what happens in Q1. They hadn't updated this yet. I don't see it being negative. But if you notice, like what happens before a big major stock market drop is you'll see earnings go negative. And so, you saw it happen right there when it was going into Q4, Q1 of 2019, 2020. You can see going over 2000 dot-com bubble, it happened right before. You see what happened in 2008. It actually started happening in 2007 before the drop happened. And so that's what we're looking for. And the data we got to pay attention to is something, we've talked about, we'll continue to talk about, to stay updated on, is literally discretionary spending, right? That's what it's all about, okay? Remember, we own very little of the stock market, but we make up 70% of discretionary spending or consumer spending. And remember, what is our economy based on? Debt. So it's not us actually spending cash. It's up there running the credit card and debit cards up like crazy, okay? Which we've applied for a lot of credit cards this year, so we got more run up, got a lot of equity in the homes, as somebody else mentioned in the comments, right? And so that's things to look out for. But understand, another data point that just came out, I think it was the end of last week, was also talking about the savings rate, which has absolutely plummeted. As you can see, it fell off a cliff since the government stopped sending us checks and a bunch of stimulus, and the Fed started raising rates and all that good stuff, and it's down to 4.3%. And if we scroll over here, you will see that right there, another chart here, you can see it even more visible, is the lowest it has been since 2008. You can see it's well below the 10-year average right now. But just look at that to the right there, that huge spike up and down. I mean, that's what happens when you print 40% of the money in circulation in less than 2 years, right? And understand, this is not a coincidence that as inflation has gone up, as I'm going to show you, that the savings rate has started to fall off a cliff and drop this low. Why? Because people are having to spend more money on less and dig into their savings, as a matter of fact. And check this out. This is right here, the inflation rate, and then look what happens here. Boom, perfect cross. You see the savings rate drop, and that's when inflation really picked up right there. I think it was like April 2021, and started eating into people, right? And again, don't forget to hit the like and subscribe button if you get something out of this, guys. And I always say, if you want to prove this data right or wrong, just look what's going on in your own bubble. You know, look what's going on with you and your family and friends. Are you spending, and you know, put this in the comments, just as much now as you were at the beginning of 2021? Is your savings rate just as high, more or less at this point in time? Is the raises you're getting to work offsetting these extra costs you're spending on food, gas, and everything else? You know, are you spending much? Are you spending more on stuff you don't need? Or are you spending less? That's all you have to do is ask yourself that, really. Okay, and understand. You know, the one thing you gotta make sure to understand is that 68% of the country, 68% of households make less than $100,000 a year. Okay, that means some make $10,000, some make $99,999.99. Okay, so it's a big range, but it's the majority of the country. Okay, fit in that category. And so you got to ask yourself, or if that household, if you fall into it, or those households, which are going to make up for the majority of our discretionary spending here, what we depend on to push the economy up for them to run up debt and stuff, are they as strong now as they were a year ago? And will they continue to get weaker if inflation stays higher? And what does that do? If they're getting weaker and inflation stays high, then that comes back to the stock market. Now we'll start talking about earnings, right? That's the key part of this. That's the part of that chart. Will those earnings keep going down until they get into the negative? And if they hit into the negative, we know it's coming. If they don't, you know, I think it's 100% guarantee, but pretty close to it, that we won't hit the huge crash everybody's calling for, right? It's a good chance of that. But don't forget, it's not just about inflation as well. What do you have going on? Quantitative tightening, not easing anymore, okay? The Fed will begin rolling their balance sheet off here in 2 days, right? So that's going to make interest rates go up even higher from here. It's almost like an extra rate hike, and I think that's why you don't see them doing 75 basis points or 1 basis point, something like that. I think that's the reason why you see them doing 50, because they realize them rolling off their balance sheet now is actually just like an extra rate hike towards us. And so it will suck more liquidity out of the economy, which is what they want to do. And so, you know, that's a good thing. Like, for example, this week, if we continue the next couple of weeks, the stock market just continue to start running up again, the Fed will have no mercy. They'll say, okay, we got you. You know, you must think earnings is going to be huge, or you guys are still out there spending. So obviously demand must still be high. So we got to beat it down, right? And that's why that's why this number right here is important. And that's the consumer sentiment number, right? That number right there, the latest one just came out last week, again, is dropped all the way down. We just see what happened in 2008, and we're not even in a financial crisis right now, right? I mean, what is the crisis? Besides we have high inflation, right? But consumer sentiment, people are like, this sucks. That's basically what it tells us, right? This sucks. The economy sucks. Things are expensive. I don't know what's going to happen next. Is it going to come down, or is it continue to drain my savings account? And am I going to have to continue to go in more and more debt? Because the worse people feel about things, the less money they spend. That's just the way it is, okay? And I got to tell you this. Just think for a second. Right now, it's 45 million households don't have to pay any student loan debt right now, right? Just imagine, I think it's August, is it? When that kicks back in, the average student loan payment is $300. That would be an extra $300 expense on average that 45 million people, assume everybody pays, will have to spend, right? That's like 13.5, is that right? 13.5 billion every month that will be going towards student loans and won't be going out in the economy for anything else, right? So just take it as a way as that's $13.5 billion that won't be going to savings accounts, and they won't be doing any kind of discretionary spending, right? And so that's a huge problem. But, you know, I just want to at least bring this to your attention. So this is another thing I will be certainly tracking every single month as it comes out. Tomorrow I'll end up giving you, putting out another video kind of talking about something I told you I'd keep you up to date on. And one thing we still haven't seen the turn on, as far as like, you know, you do not hit a bottom of any kind of portion or anything else, or start going on an upward trend in the stock market until this indicator turns up. And it is a lagging indicator, which is what sucks about it. But either way, though, you look at the chart, the stock market does not go up without it. Okay, there's only certain things that drive. There's like 3 big things that drive the stock market, and I'm going to go into those tomorrow for you in more details. So I just want to put this one out, try to make it as quick as possible. But you know, hope everyone had a good Memorial Day. I know my Memorial Day weekend was packed. We did 3-day trips, and I'm exhausted, and I really just want to sleep. My son had a blast, and I mean, he's been sleeping like a baby. He's so exhausted. But anyway, I hope you guys have a good night, and I'll see you tomorrow.